What's up everyone, it's Karthik with MoneyVest. So what a huge flip in the market sentiment here, because the markets are now pricing in for a 50 basis point rate cut next week. So next week we've got the Federal Reserve meeting, we've got Jerome Powell press conference, we've got the summary of economic projections. You can pretty much track all of that on our economic calendar on the MoneyVest website. I'll go over that in just a minute. But S&P 500 and NASDAQ putting in the best week for 2024. Absolutely incredible gains. The NASDAQ was up over 65 basis points today, almost back up to 17,700. We've got the S&P 500 just over 5,600, and we got the Dow Jones almost up to 41,400, up over 297, almost 300 points on the day here. This right here was the entire market. So you've got S&P 500 up over 4% on the week. So very, very nice candle within striking distance of all-time highs. The NASDAQ also pushing up a little bit over 5, almost 6% on the week here, up almost 1,000 points. A little bit farther off from its all-time highs of well over 18,000, but well within striking distance here. Now back well within 5% of its all-time highs as well. And you got the Dow Jones pushing up well over 1,000 points on the week, up over 2.6%. Also very, very close to its all-time highs as well. So an incredible week for us long-term investors, as well as our options portfolio doing really well. If you want to join our community, link's going to be down below if you're interested in joining us. But let's talk a little bit about some individual sectors, and more importantly, talk about what really happened. What was the big flip this week? And this wasn't just a flip from Monday. This literally happened in the last 24 to as much as 48 hours, as investors becoming more optimistic for a possibility for a 50 basis point rate cut as opposed to a 25 basis point rate cut. So coming over to the individual sectors, all 11 sectors were green on the day. XLU extending its leadership and dominance so far year to date, up a little bit over 1.4%. Industrial was up over 1%. We got communication services on the back of Google that's pushing higher, so it's seeing a very nice recovery back up, almost up 1% on the day. Then we, of course, materials, staples, real estate, discretionary, energy, S&P 500, and believe it or not, technology is still lagging, even though Nvidia has seen a well over 15% gain on the week. That's why we've done really well since I've been trading Nvidia on my options portfolio. Technology on the day, however, was only up about 0.5%. So still green, but not as much as what we witnessed for utilities, industrials, and communication services. Now, I want to be very clear that on the surface, this may actually seem very, very bullish and very optimistic for the markets, because all three indices were up, capping their best week here on 2024. All 11 sectors are green. I mean, we're very optimistic for a 50 basis point rate cut, but I think it's really important to understand what may be brewing underneath, because if you really take a look at, once again, where did the liquidity really go? It was utilities, industrials, right? Materials and staples and real estate, right? So those, again, are some of the sectors that one could argue are very, very defensive in nature. So yes, while we did see technology do well, so Netflix was actually one of the leaders on the day, up almost 1.5%. Then we had, Microsoft up over 84 basis points, Tesla pushing up 21 basis points, and most of these companies, most of these stocks were actually down. So we had Nvidia, Apple, Meta, Amazon. Like Google is missing from this list, but Google was actually one of the stocks that was pushing higher, more than Netflix, I believe. So if you come over here, let's just add Google to this list as well. I don't know why I didn't have that. So Google up 1.8%. So yes, leading very, very well here in terms of that Magnificent 7 recovery. However, Amazon, Meta, Apple, Nvidia were red. So this, again, was not a tech-driven rebound. It was a rebound driven largely on sectors such as utilities, staples, real estate, we got materials, industrials. So very, very defensive positioning from the markets again. And why that might be, like, why would that be the case? Well, if you come over to this particular catalyst here, so Wall Street advances as traders' bets rise for bigger Federal Reserve rate cuts. I actually did a video on this earlier today. So 7 hours ago, I posted this where I essentially highlighted this idea that I am now convinced of a mild recession that I think will follow in the US. That's why I think it's really important for us to also understand that while there is a lot of optimism, there is a lot of bullishness, there is a lot of momentum in the markets right now. We're continuing to push higher. I mean, this week was amazing. portfolios are doing great. We're seeing all 11 sectors push higher. We can't take our eyes off the ball, which is the markets are now pricing in for 50 basis points. I mean, they're not fully priced in. It's still very much a coin flip at this point, but the markets are now expecting there is some high probabilities that the Federal Reserve comes in with a bigger rate cut of 50 basis points. In other words, a jumbo rate cut of 50 basis points. So Wall Street's main indexes rose Friday as investors reevaluated the possibility of a bigger interest rate cut by the Federal Reserve next week. So next week is the Fed meeting. So if you come over to our calendar, by the way, you can pretty much scroll from previous weeks to as much as future weeks. This was the week that just ended on September. Actually, this is next week. So if you come over to the current week, this is the current week that just ended on September 13th. You can also sort this from low, medium, high impact into the market. So if I remove for low and medium, you'll notice, of course, inflation numbers came out on 9/11. We had the PPI numbers on 9/12. But if you go over to the next week, right? Next week is where the interesting stuff is, and that is on Wednesday, September 18th. You've got the FOMC economic projections, you've got the FOMC statement, you've got the Federal Reserve interest rate decision, and you've got the FOMC press conference also happening. And that's going to happen actually at 2:30 p.m. Eastern. This is going to happen at 2 p.m., 2 p.m., 2 p.m. And of course, the previous number, 5.5%, the estimates are very much for 5.25% for now. But the markets are now fully pricing in for 25, but very, very, very close to a potential for 50 basis points. So the traders are betting on a 50 basis point rate cut, jumped to 47% from 28% on Thursday, as I mentioned earlier in this video. So make sure that you do check it out, because there was a couple people, an advisor that's very closely working with Jerome Powell, and also the New York Federal Chairman, what's his name? Bill Dudley said Thursday there was a strong case for a 50 basis point interest rate cut as well. However, Goldman still sees 25 basis point Fed cut next week. But this right here is the probabilities, as I highlighted in my other video, which you'll notice that we are now 53% for 25 basis points. And then we also have a 47%, which is actually very, very high for a 50 basis point rate cut. Now, why would the market be pricing this in? I mean, why would the market be very optimistic for a 50 basis points? In my opinion, I think, the Federal Reserve knows that the economy has been weakening. I mean, they know that there's a lot of signals out there. There's a lot of indicators, including, the companies and what they've been announcing, whether it's McDonald's or Ally Financial or Walmart or Home Depot or Lowe's. They're stressing on how the consumer is weak. They're not financially well off, considering higher inflation, higher prices, and the unemployment picture also worsening. They certainly do believe that the economy is not in the best shape. It is trending in the wrong directions. And that's why they're becoming more optimistic. And these numbers essentially flipped after the comments from Bill Dudley, as well as the advisor that is very close to Chairman Jerome Powell. So both of them advocating for 50 basis points kind of aligns the market a little bit that there is a possibility. And if this numbers go up to over 50%, this is about as uncertain as the markets are going to be going into next week. Like this, we still don't know. We're 4 days away from the Fed meeting next Wednesday, and we still don't know whether we're getting a 25 or a 50 basis point, because this is about as split as it gets. Like this is about as a coin flip for next week as we are. And you'll notice that how quickly these things have shifted to being more of a coin flip, because up until yesterday, we only really had about a 20% probability for a 50 basis point cut, and well over almost an 80% probability for a 25, right? So 25 was pretty much locked and loaded, but today we've got a whole different picture, as both of these are pretty much split, almost 50-50, 47-53, really, at the end of the day. So that's really what's going to come down to, whether we get a 25 or 50, but the markets are also playing a very, very dangerous game, because, they're pushing higher on these expectations that the Federal Reserve is going to do a 50 basis point cut, because if they do that, the markets are going to be expecting a recession. Otherwise, the Federal Reserve would not be on such a fast-cutting cycle. I mean, they would like to do it in a more slow and steady fashion. But in my opinion, as I've already pointed out, that a 50 basis point cut does scream weakness in the economic conditions, right? It does scream that the situation is worsening. And that's why they need to get ahead of this curve, ahead of this unemployment, picture that may be unfolding in front of us. And for those reasons, they may be cutting interest rates a little too fast now with 50 basis points. So it could send the wrong message to the market. And with that in mind, I think the markets are repositioning back into utilities, a little bit more defensive parts of the market in anticipation of that 50, which would reflect the message that the economy is weakening faster than what the data is suggesting for us. So hope that makes sense. That's kind of like the chain of thought that I'm thinking about. Maybe the markets are thinking about it as well, because there would be a reason why the markets would be so optimistic about 50 and also rotating into utilities and being very, very defensive going into next week's Federal Reserve meeting. So we really did not see a lot of inflows in Magnificent 7. So what you'll notice is the big three here only gaining about 20 billion. So that's about 21 basis points. So of the $270 billion that it was increased in the S&P 500's market cap, only 20 billion came from the big three. So that's less than 10%. If you look at Max 7, only 48 billion. So again, that is, just under 20% or something, right? So it's not really that much in terms of that market cap concentration or contribution, I should say. 80% coming from the 493 companies. So that again is a rotation. It's a little bit of a defensive positioning from the market. And if you consider the top 10, 45 billion. So there's a few companies that obviously lost on the day today. A lot of that is probably coming from Google, but 45 billion off of 276, again, not a lot. So 490 companies gaining a lot of market share on the day today. You can pretty much track that on our platform as well. But the bottom line is we didn't quite see this tech-driven rally. It was really just on the day, a lot of utilities, staples, industrials, materials, healthcare. Technology wasn't even in the top 5. Adobe lost today, over 8.4% sell-off. That's over $22.4 billion. Eli Lilly down over $10.5 billion as well. We got Berkshire Hathaway down over $7 billion. JP Morgan down over $6.5. Amazon $5.4 billion. Apple $4 billion. We got Boeing $3.6 billion. And Meta down about $2.5 billion. So some of the big losers in terms of the market cap were these companies. Now this right here is the options portfolio. We just locked in a little bit over $2,300. I am trading this options portfolio. I'm running the wheel. So again, if you want to participate and follow along, link's going to be down below. We're set up for next week for another NVIDIA trade going into this Fed meeting. And so far, since I've started this portfolio back on August 19th, so that was the beginning of this Patreon portfolio for options trading, I've locked in a little bit over $3,100, which, by the way, on a total return basis is 3.5%. That's how much the portfolio has grown in 3 weeks. If you compare that to the S&P 500, the total return has been 0.02%. So that's been the difference. And again, I'm going to continue to keep track of this. I'll update everybody on Patreon. I'll send out all the alerts. If you want to get access to this, you want to follow along, you want to learn how to trade options, how to sell options, how to trade the wheel, link's going to be down below. We'd love to have you on board, and I will update everybody with the total P&L, cumulative P&L, total returns, weekly returns compared with S&P 500 as well. So link's going to be down below. We'd love to have you on board. Okay, now coming over to some of the other items. So this is what the technical dashboard looks like. There's a lot of momentum across the board. Everything is pretty much green, with Google and Apple still struggling a little bit on their medium-term averages, 92150 SMA. And on the asset class perspective, the dollar index continues to show signs of weakness. Financials still struggling, and energy still down. So it's really just 3 places where there is a lack of momentum. That is dollar index, financials, energy. Everything else, you can see they're green across the board, trading back above their moving averages very, very nicely. Got the Money Vest Index trading just a little bit under 4. Volatility is over 16.5. Volatility readings come down to 43 percentile. And then we've also got, majority of stocks back trading above their moving averages, 71%, 73%, and 62% of stocks trading back above their 50, 220 simple moving average, respectively. I got the 50 at RSI, which is pretty neutral, and 0.925. So we're not in the red zone just yet. We're red in the Money Vest Index, we're red on the volatility, but we're not red on some of these indicators. Like, for example, this right here, this right here, this right here, this right here, this right here. So we're not red for some of these. So the moment we start to turn red, that's where the risk reward is going to start turning very, very unfavorable from a market perspective. Now, a few more upgrades coming in. So S&P 500 hit a new record high above 5,700, and Deutsche Bank increasing their price target to 5,750 by the end of this year as well. So a few other targets getting increased on the S&P 500 as well. So coming over to the technicals here, SPX. very, very nice move to the upside on the day. So if you come over to the technicals, we have now fully broken outside of this resistance as well. That's going to be that support at 55.65, and we're pretty much back to the same level as where we were on towards the end of August before we started to see that first week September rally, first week of September sell-off that we witnessed, and we essentially front-loaded a lot of that sell-off for the market. And then this right here, this week has been a very nice recovery back up. From Wednesday onwards, we essentially see very nice move up to over 4% momentum higher for S&P 500. So resistance is going to stay put roughly at here, 56.40. Support level right about here at 55.79, 55.80, and we're very much within striking distance of all-time highs that sits at well over 56.68. So this right here is going to be that resistance. A breakout above this is going to put us on the target for getting up to all-time highs once again. QQQs are now once again coming up to their resistance, and this is exactly where we got rejected going back as far as, again, the last week of August here. So Friday, August 30th, that's where we got rejected before this first week of September sell-off pretty much began. And this right here, very nice rally so far this week, and we're now coming up to this resistance once again. So next week's going to be very interesting, whether the market see a breakout, retest, and then a back up to all-time highs rally, or are we going to get rejected here on the Qs and sell off on whatever the Federal Reserve tells us or does with interest rates. So we're prepared. A lot of updates coming out over the weekend on technicals, on options portfolio, on tradable opportunities, on long-term investing opportunities, money invest index, volatility, everything with the full breakdown and full coverage on the Federal Reserve and the expectations and the market's potential reaction on that as well. So tune in, subscribe this weekend. Definitely do prepare. That's what I'm going to be doing. I'm going to be spending the next couple days in preparation on how to trade and how to plan for next week, because I do have cash secured puts that I'm going to be selling, and I do have my calls that I've rolled out for next Friday's expiration on NVIDIA, which are going to be very, very sweet profit for next week as well. So we've got lots of planning and trading to do for next week. So I'm going to keep the technical update on individual stocks and Magnificent 7 for another video. I want to keep this video nice and short so that you can go into this weekend and enjoy. So happy investing. This is where we are. Very, very defensive positioning from the market. QQQ is pushing up to that resistance here that we're going to be watching next week. And S&P 500 also with a very nice breakout and also now approaching up to that resistance where we were towards the last week of August as well. So this right here can be considered as a little bit of a resistance that the NASDAQ and the S&P are both coming up to at the moment. So that's where we are. Hope you guys enjoyed this video, found it helpful. Very quickly going over to volatility, as we already know, continues to slide lower and lower. We're down to the percentile, which is going to be very quickly at the 43 percentile. So still in that medium value range for the VIX. And the next target's pretty much going to be 15.5 for the VIX as well. With, of course, some of the other values at 18, 20, all the way up to 23 for volatility as well. So nice little crush back down on the VIX. Market's pushing back higher. Crude oil continues to get dumped here. Support level sitting roughly at $66. And of course, there's significant pullback on all the yields, with the inversion of the yield curve continues to be in full swing, up 102%, back up to over 7 basis points right about now. And it's really just the uninversion of the yield curve that puts us into a recession. I've made myself very clear. I do expect a mild recession in the U.S. Over the next 3 to 6 months. And we'll find out what happens with the economy and, of course, with the unemployment rate as well. Definitely do check out my other update as well, because that's going to clear a few things up. We've also did see a huge divergence, as I pointed out in this video. First time we're seeing in 25 years. So I think that would be very, very helpful for everyone as well. So hope you all enjoyed this video, found it helpful. Make sure you drop a like and subscribe to the channel. Also do join our Patreon, our Discord. You can engage with thousands of traders, investors worldwide. We've opened a few more spots. You can track my options portfolio, all the trade alerts, all the updates, analysis, as well as our very own MoneyVest website that you can also access. And this right here is the economic calendar that you can also check out, as well as the earnings calendar, as well as the market snapshot, and everything is going to be available over there as well. So you can see S&P 500 utilities hitting a new all-time high here, as utilities was the place to be for investors as they are moving into a little bit more defensiveness. So again, want to be very clear. Do not fall for this momentum that we're seeing. It's good. It's good. We're seeing across the board, all sectors up. A lot of momentum for the NASDAQ, S&P, Dow Jones. All three indices trading at all-time highs. But if you peel the layers and you look at underneath, right? 50 basis point pivot. Markets becoming more optimistic for 50 basis points and rotating into utilities at the same time. That screams that they are expecting to be more defensive, and there are recession probabilities still on the table. So I really want to be very clear that do not ignore the economic weakness that may be happening underneath. So that's all I've got for you today. As always, make sure you drop a like, subscribe to the channel. Happy investing, and I'll see you all in the next video.